So for all intents and purposes, the product itself is really a working capital product, right? We are trying to support businesses in accessing capital, the capital that they can use for growth as growth capital, exactly what I said earlier, growth capital, employ more staff, renovations, expansion, so we're really trying to give them capital that when they need it. And also the product is built around flexibility, right? We want the guys to actually understand, be very clear on what they are paying, right? So it's a very personalized product in that we link our collections or the payments, the repayments, if we can call it that, the repayments to the business turnover. So just the product we call the merchant cash advance, right? Being a merchant cash advance, it is about us saying, we are going to buy your future turnover. We understand that you've been in operation, right? Let's look at how you've actually traded and then say, how much do you need going forward? And based on that, let's actually get into a partnership model, right? A partnership model that says we are going to buy your turnover, right? You're going to sell it to us, right? So by doing that, right, we actually then, it actually brings me to the next point. We actually then partner with the businesses in that when they are not trading, because we bought future turnover, right? When they're not trading, we will not penalize them, right? We actually, if they are doing well, we do well with them. If they're not doing so great, we don't do great with them, right? So that's at a high level, that's what the product is all about. But what is so distinct about the product? One, it's unrestricted, right? We don't dictate to a small business to actually say, when you take this money, we want you to do A, B, C, D, right? So we deal with very business savvy entrepreneurs. They know it's in everyone's best sort of interest to actually use the money productively. So we encourage the productive use of the money. And it's unsecured, right? So we do not take any collateral whatsoever. So we are a cash flow lender as retail capital, and the product is really based on analyzing cash flows and not necessarily on the assets that are going to back the funding. And that flexibility, when you look at now when we're sort of like in deep level 5, 4 lockdowns, businesses were closed. We had a huge chunk of our business is actually not trading. And because of that, we found ourselves where 1 out of 10 of our businesses was trading, right? But the beauty of it is we understand these businesses, right? Because we bought future turnover. We understand that your doors are closed. We're not going to come knocking and say you need to pay up, right? When we understand what's happening in the economy. So we actually suffer with our partners, and we actually do well with them. So that is the product that we actually have in the merchant cash advance. But what's also very important about the product is you need to have a digital footprint. And I'm talking digital footprint from a turnover perspective. We need to be able to look at the turnover and bank the turnover, right? So if you come, you say, guys, I make 100,000 a month, but it's all cash. We don't know that, right? So I think that digital element is very important because we use that to actually analyze our comfort levels from a risk perspective.